Hello, hello. So here's something interesting happening in the markets. Microsoft, after reporting earnings, was down for a while, but then it rebounded. And as you'll see here, it rebounded on upbeat guidance. Now, we're going to examine the details, of course, but actually the rebound seems fairly solid here. About 4% right now is what the stock price is up on pretty much in the after hours market. So we'll see what's going to be happening tomorrow, but we're probably going to be having a nice day, at least for the Nasdaq, I'm assuming. Now, I'm a little bit, I'm a little bit upset because I do want to get Microsoft at some point, but the damn thing keeps going higher, and I want to be getting it at a better price. Now, it has gone down, don't get me wrong, it has gone down like 30%, but I wanted a steeper decline, frankly, in order to be buying this one. What kind of decline? We're going to answer in this video, of course. But before we do that, we take a look at the earnings report. So let's see what happened here. Microsoft shares rebound on upbeat guidance. That's pretty much the latest news that we have from Amazon here. So Microsoft reports weaker than expected results for its fiscal fourth quarter here. Okay, interesting. Let's see what happened. Key takeaways. Earned 16.74 billion versus the year ago figure. They don't have it here for some reason. EPS of 2.23 was better than 2.17, so they did better in this one. Revenues up 12% year over year to 52 almost billion, and the consensus was 2.29 of EPS on 52.38 billion. Now, the consensus is worse than what they did, but still, it's better than the Q4, for example, of the previous year in this case. So this is still pretty solid here for Microsoft. Now, the other notable figures in Microsoft's Q4 earnings report include the 2% annualized increase in more personal computing, while productivity and business processes climbed 13%. Microsoft reiterates its full year outlook. That's very interesting here. For the current financial quarter, Microsoft expects its revenue to fall between 49 and 49.25 and 50.25 billion. Now, the analyst has actually called for a higher estimate of 51.49, with an implied gross margin of almost 70%, which is absolutely awesome here. However, it was better than the consensus of 69.30 here. And so the tech titan reiterated its full year guidance despite the more challenging micro environment here. Very, very nice to see. And this seems to have affected the company's results here, and this is why they are up after hours, after reporting their earnings here. Now, let's take a little bit of a look at what has been happening with Microsoft overall. We can take a look at the insider trades here for Microsoft just to see what kind of movements have been happening among insiders. For the most part, it's awards here, which tends to happen a lot with these eBay area companies. They do actually spend quite a lot of their shares in compensation for officers. What we kind of want to be seeing here for that could be interesting is officers actually selling a large amount of their own securities, which you do see officers actually selling quite a lot here. But take a look at this. These are mostly restricted stock units, and this matters a lot because restricted stock units tend to be given away for free. As you'll see here, the transaction value is 0, and so they are considered sort of like part of compensation. Insiders tend to sell them immediately because they are taxed immediately as well. And so this is very, very normal here, and you could be seeing very high lots in terms of the amounts of stock here, and still it's actually absolutely fine. What would be interesting and what I always want to be examining is, for example, whether we see a CFO, for instance, selling a lot of stock, and we can use our search here. We don't really see a CFO selling here, but overall, I kind of like to see what kind of transactions are happening. And frankly, you are mostly seeing like restricted stock units, and when we're talking about common stock, it's just some very small lots here, especially compared to the securities owned, and it doesn't really seem anything weird is happening here, really. Not much of a sell-off going on. Normal stuff, I would say. In terms of senators, let's see what's going on here. Are there any senators? And senators can be interesting because you can get some interesting information about senators buying. Because, insider trading is illegal, but, they may have some sort of tips, I'm assuming. So, you'll see here that there is less selling. You can kind of see it in the colors too. More selling here, sell full. You can see they sold out of their stock. Over here, there's just some partial selling and more purchasing overall. Although there was quite some purchase last 6 months ago, pretty much. And you will see, for instance, Kevin Hearn has been buying Microsoft with both hands over here. A lot of buys, and some partial sales and purchases here. Nothing to see here for the most part. But you definitely see mostly buys here. I would say for the most part you are looking at buys, and it's very, very interesting to see. The senators that do own Microsoft seem to be buying. Among them, Nancy Pelosi is also buying quite some, with this very, very high lot, actually 1 million to 5 million over here. Published date April 9, March 19 was the transaction date, so couple of months ago or so, 3 months ago or so. Very, very interesting. Now, let's examine and take a little bit of a closer look at the financial statements. It kind of gives us the story of the company, how they have been acting through the years in terms of their revenue, net income, how their financials have been moving. It's very, very important to see, because you'll see here 90 billion to 170 billion is amazing growth here. It's not easy to grow when you are reaching these numbers. It requires a much delicate operation, and it requires a lot of skills to be growing from 90 billion to 168 billion. And they seem to be having some very nice revenue growth over the years. Now, the net income from 21 billion to 61, tripling pretty much. The net income is amazing to see as well. Great if I'm owning the company back in 2017. Now, in terms of the total equity, 72 billion to 142, doubling pretty much their total equity. And if we go back at our metrics page just a little bit, you will see that the company has been also, for the most part, buying back shares. This is why you are looking at a minus 3% decrease in terms of the company's outstanding shares count here. And you can kind of see that the company has been growing very nicely as well, with great margins and great returns. Is what we forgot to talk about. Return on equity of 45% right now, and net income margin of 36% is absolutely awesome. Remember, this is a software company, so that matters a ton. And we're going to examine the dividend as well, but let's go back and just take a little bit of a quick look at the cash flow statement before we do that. From 21 billion to 61, but how does that reflect in terms of operating cash flow? 40 billion to 76 billion over here, almost 77. And in terms of financing activities, it's in the negative, which is a good thing. The company is buying common stock back. Great thing to see if you are a holder here. You'll have to see that, and paying some dividends. We will examine the dividends in a little bit more detail right after. 31.38 billion in free cash flow to 56 is amazing to see as well. Now, I want to take a little bit of a look at the dividends, and I'm using the dividends module here. Remember, you can gain access to this tool and pretty much use it in any stock that the tool offers here, and you can do your own analysis by becoming a Patreon. You can find a link in the description box below this video if you're interested, and I would love to see you in our community. So, the company is paying about 1% in terms of a dividend yield. Now, we do have two dividend yields. This is the trailing 12-month one, this is like the average, and this is the current, because the dividend yield is deeply affected by the current stock price. So this is actually the current one. It may be a little bit lower when the market opens, because we're probably looking at an increase in terms of the stock price. And an increase in stock price means that this goes down a little bit. It may be like 9.6 again. Okay, so the company is paying about 1%, and if we go back to our metrics page here, and they have been increasing their dividend as well. It's still a small revenue, a small dividend, but it's 32%. It's already 32% of their free cash flow payout ratio, which is significant for a 1% dividend yield. It's not little, and in order to sustain the increases of the dividend, the company needs to be generating a better free cash flow here. So this 1%, while it's low, it's still quite an amount in terms of the payout ratio here. So it's quite significant in terms of the payout ratio. Interesting to see as well. Next, I'm taking a look at our stock evaluation tool, which uses historical data to deduce what kind of projections we can make here for the company. Now, the revenue growth that the company has been achieving, the 5-year average has been about 15%. So I'm going to go a little bit in between, yet a little bit more conservative too. So 15 is actually going to be my high here. And then I'm going to go 11 and 13 for the next 5 years. Now, the net income margin that I'm going to be using, you'll see that the company has been increasing their net income margins here. And in the last 3 years, the average has been 33%, which is awesome. I'm going to go again in between 27, 30, and 33. See what we're getting out of this one. Last year, they actually did 36. And the free cash flow margin, again, somewhere near 100% is what they have been doing. I love to see that. They are normalizing their free cash flow here. and I'm going to go 90, 95 maybe, and 100 here, and an annual return of 13% is what I typically want to be getting out of my stocks, unless they're super risky, in which case I would ask for more. But if I hit calculate, let's see what I'm getting out of the DCF model here. We are still in the red is the problem, and the current stock price is going to be slightly higher even after today's opening. Again, I have been trying to get a better price at Microsoft. It's just not getting there yet. It has been getting better because it has dropped quite some lately, but right now it seems like it may be going up for a little while, so it's not really reaching my price target. It's still expensive and I'd love to get it at a better price. A fantastic company, amazing company, I'd love to own it, but I need to be waiting. Maybe something happens, it goes down a little bit more. It's still expensive for me to be entering right now, so I will have to avoid, at least for the time being. Now, thanks for watching the video. I hope that kind of gave you some ideas about Microsoft, and please remember to leave a like, that helps a ton, and subscribe if you're not a subscriber already, that goes without saying, because there's going to be a lot of earnings and a lot of upcoming earnings. There's going to be Meta for pretty soon, Alibaba, a lot of companies really coming up with earnings very soon, and I'm also making videos for the ones that happened today, so stay tuned and I'll see you in the next one. Bye bye.